2.2 Payment Methods Accepted. Getting paid via cash, checks, cards, Stripe, PayPal, Zelle, Bitcoin, and more. Plus, worries and warnings and real-world considerations. The following are the major payment methods professionals use today. Under each one, you'll see not only the benefits but the realities most people don't talk about. Don't be naive. Every payment method has trade-offs. Here are the major payment methods professionals use today. Under each one, you'll see not only the benefits but the realities most people don't talk about. Don't be naive. Every payment method has trade-offs. Choosing the right one requires looking past the convenience to understand the hidden costs of doing business. Cash payments. Immediate physical payment with no third-party processor. Pros: no processing fees. Immediate possession of funds. Cons: no digital trail. Manual tracking required. Business use case. A handyman collects small same-day payments in cash to avoid fees, issuing receipts and depositing daily. When to use: small, in-person jobs. Worries and warnings. Carrying large sums makes you a target. Once stolen, it's gone. Cash-heavy businesses attract IRS scrutiny. Cash over $100 requires Form 8, 300 reporting in the U.S. Counterfeit bills become your loss, not the client's. Harder to prove income for loans or mortgages. Check payments. Traditional paper-based bank payment. Pros: familiar to corporations and older institutions. Cons: can bounce, slow clearing. Business use case. Because many legacy manufacturers are bound by decades-old internal protocols, consultants working with them are frequently required to accept paper checks by mail rather than more modern digital payment alternatives. When to use: established corporate relationships. Worries and warnings. Funds can disappear between the time issued and deposited. Mobile deposits reduce risk, but don't eliminate bounced checks. Waiting to deposit gives other creditors priority. ACH transfer payments. ACH, Automated Clearinghouse, is a U.S.-based electronic network used by financial institutions to send and receive batches of money transfers. It is the primary system behind everyday transactions like direct deposit paychecks, tax refunds, and automated utility bill payments. Proso: low fees. Reliable for retainers. Cons: slower than instant apps. Business use case. A marketing agency uses ACH for monthly $3,000 retainers to avoid card fees. When to use: recurring service contracts. Worries and warnings. Clients can dispute ACH debits in some cases. Incorrect routing, account numbers delay cash flow. Wire transfer payments. High-value domestic or international bank transfer. Pros: secure for large transactions. Cons: expensive fees. Business use case. A contractor receives $25,000 internationally via wire before starting construction. When to use: large domestic or international payments. Worries and warnings. Wire fraud scams are rising. Fake wiring instructions are common. Wires are nearly impossible to reverse once sent. Zelle payments. Zelle is a U.S.-based instant digital payment network that allows users to send and receive money directly between bank accounts, typically within minutes, using only an email address or mobile phone number. Check your bank to see if you can use Zelle to receive client payments. Pros: typically fee-free, immediate deposit. Cons: limited fraud protection. Business use case. A web designer collects a $5,000 deposit instantly during a Zoom call. When to use: trusted domestic clients. Worries and warnings. Authorized transactions are hard to reverse. Banks may freeze accounts if activity appears unusual. Venmo and Cash App payments. Venmo and Cash App are mobile peer-to-peer, P2P payment services that allow you to send and receive money instantly using a phone number, email, or unique handle. Some customers have both, while some only have or use one. You should have both just in case one client prefers to use Venmo while another Cash App. Pros: fast and widely used. Cons: business fees and IRS reporting requirements. Business use case. A personal trainer collects weekly payments via a Venmo business profile. When to use smaller service transactions. Venmo, specifically. Pros: highly popular with millennials. Lower merchant fees, 1.9%, than Cash App. Integrates with PayPal for broader checkout options. You can move money in your Venmo account to your bank account instantly for a small fee or within 3 business days for no fee. Also, they have a debit card which you can request, which is linked to your Venmo account so you can make personal and business purchases with or make ATM cash withdrawals. Cons: default social feed can expose your business transactions. Lacks formal invoicing. US only. Be sure to enact private transaction so no one on that platform sees who you're paying and for what purpose. Cash App, specifically. Pros: better privacy, no social feed. Supports international transfers between the US and UK. Includes built-in business tools like itemized invoicing and receipt generation. You can also move money in your Venmo account to your bank account instantly for a small fee or within 3 business days for no fee. Also, they have a debit card which can be linked to your Cash App account so you can make personal and business purchases with or make ATM cash withdrawals. Cons: higher transaction fees, up to 2.75%. Limited customer support, often no phone option. Worries and warnings. Using personal accounts for business violates platform rules. Accounts can be frozen without warning. 1,099 reporting thresholds apply. Debit and credit card payments, such as Visa, MasterCard, American Express, via Stripe, Square, PayPal, and merchant accounts. Card payments processed through a merchant provider. If you have a PayPal account, you can set up payment links for your clients and customers to click on, pay with a debit, credit card, and then you've got your money. Pros: high convenience, increases close rates. Cons: processing fees and chargeback risk. Business use case. A branding consultant sends Stripe links during a Zoom call. Clients pay instantly. When to use online services and remote clients. Worries and warnings. Chargebacks can occur months later. Too many disputes can shut down your merchant account. Clients may dispute legitimate completed work. Sudden volume spikes can trigger account reviews. Funds may be held during disputes. PayPal payments. Online payment processor that you can use, like I do, to create payment links for your clients and or customers to click on to pay for your products, services. Pros: easy to set up, lets you create individual payment links per client, recurring billing, etc. You can also create a payment link with a voluntary amount entry. PayPal now accepts Venmo payments checkout as well. Cons: fees per transaction and potential account holds if your account is being looked at for relevant reasons. When to use: individual payments, product payments, subscription, recurring billing payments, and international clients. How I use PayPal: I created a single payment link under Create payment links and buttons option inside your PayPal account, which generates their standard email payment link. It's long and has a lot of numbers and letters in it. You can image. Also, for this particular payment link, when creating it, I chose Customer Set Price, which lets the client enter how much money they are going to pay me. I do this for several reasons. In most cases, I tell different clients to pay me different amounts for different reasons, such as $50, $100, $250, $500, or $1,000, etc. Having to create one single link versus dozens or hundreds of payment links per client inside PayPal saves time. Then I'll create a redirect URL on my website to forward to that PayPal payment link above, which reads like this: bartsmith.com/paybart. Try it out. It really works. bartsmith.com/paybart. I love this because this URL is easy to remember and type into any text or email message, and it lets the client enter the amount they're going to pay me. The client can then choose to pay with their PayPal account, credit card, debit card, or Venmo. Cool, eh? Worries and warnings. Sudden volume spikes can trigger account reviews. Funds may be held during disputes. You operate under their rules, not yours. Escrow service payments. Using an escrow service is like having a neutral referee hold the money while you play the game. It ensures nobody gets cheated. Third party holds funds until approval. I used an escrow service once when I was selling a domain name. The buyer wanted to be sure I transferred the domain name to him, and I wanted to ensure I got paid. So, we agreed to use an escrow service for the transaction. I sold that domain name for $1,250. I paid just $10 for it originally. Pros: protects both parties. Cons: higher service fees. Business use case: a developer uses escrow for a $15,000 first-time project. When to use: large new client engagements. Worries and warnings: release disputes can delay final payment. Escrow terms must be crystal clear. Bitcoin and cryptocurrency payments. Decentralized digital currency payments. Pros: borderless international settlement, increased privacy and autonomy, instant, lower transaction fees than some other payment institutions charge, elimination of chargebacks, access to global clients, and irreversible. Cons: price volatility and tax complexity. Your payment in Bitcoin might be valued at 2.0 today, but then takes a dip tomorrow and is only worth 1,500. That's not the 2.0 you agree to receive when you priced a particular project. So be sure to transfer that BTC to USD as soon as you receive it, if that's what you want to do. Business use case. A tech consultant accepts Bitcoin from crypto-native domestic and international clients. When to use: tech-savvy clientele comfortable with digital assets. Worries and warnings: value can swing dramatically between invoice and conversion. Tax reporting is complex and must be tracked precisely. Irreversible transactions cut both ways. Deposits and payment plan payments. Structured milestones or installment payments. Pros: improves cash flow and commitment. Cons: requires clear written terms. Business use case: a contractor collects 50% upfront, 25% mid-project, 25% upon completion. When to use: multi-phase or long-term projects. Worries and warnings: vague milestone definitions create disputes. Letting work outrun payment destroys leverage. The hidden cost of getting paid the wrong way. Choosing an inefficient or wrong payment method often creates a leaky bucket effect, where your actual earnings are quietly drained by factors far beyond simple transaction fees. The wrong payment method can cost you money. The wrong documentation can cost you legally. The wrong structure can cost you leverage. And naivete can cost you your business. Professionals choose payment methods strategically, not emotionally. For instance, financial cost, the wrong method. Every transaction has a price tag. If you choose a method with high percentage fees, currency markups, or withdrawal costs, you are essentially taking a self-imposed pay cut. For example, losing 5% on every $10,000 project to hidden fees equals $500 of lost profit per job. Legal risk, the wrong documentation. Payments without a clear audit trail or a signed contract leave you vulnerable. If a client claims they never received your services, and your payment method doesn't offer seller protection or clear record keeping, you have no legal ground to keep the funds or fight a chargeback. Negotiation leverage, the wrong structure. How you ask to be paid signals your level of expertise. Requiring a deposit via a professional platform or escrow shows you are an established professional. Conversely, accepting pay me whenever or using personal P2P apps can make you look like an amateur, giving the client the psychological upper hand to delay payments or demand scope creep without extra pay. Survival, the cost of naivete. Trusting every client to do the right thing is a common beginner mistake. One large fraudulent dispute or a client who disappears on a net 90 invoice can wipe out your cash flow and force you to close your doors. Professionals assume things will go wrong and build systems, like milestone payments, to survive those moments.